Hello and welcome to the day ahead. It is Monday, August the 29th. I'm Andrew Gagan. Well, let's first take a look at the week ahead. And locally, we'd expect July building approvals and Q2 construction work earlier in the week. CoreLogic's Home Value Index on Thursday, along with Q2 business investment and the PMI. And taking a look at overseas, US home prices and consumer confidence on Tuesday, China's Purchasing Managers Index, and the PMI also out of the States on Thursday, along with the all-important non-farm payroll numbers on Friday. So let's get to global markets, which slumped on Friday as investors digested comments from Fed Chair Jerome Powell that the central bank will keep lifting interest rates even in the face of recession. All of the 11 major S&P 500 sectors were lower, led by sharp declines in the IT sector and consumer discretionary. The S&P 500 losing more than 3%, while the Nasdaq was down around 4%, and the Dow also down heavily. Friday's falls wiped out the gains made this month so far. Now, stocks specifically, high growth and tech stocks dropped, led by Nvidia and Amazon, along with Alphabet, Meta and Block. Dell fell more than 13% on forecasts of slowing consumer and business spending. And Affirm tumbled 21% after the buy now, pay later lender forecast full-year revenue below estimates. Meanwhile, MSCI's gauge of global stocks fell 2.5%, its worst day in more than 2 months. And European stocks slid as investors worried about rising energy costs. Raise and hold. That was the interest rate strategy outlined by Fed Chair Jerome Powell on Friday. The central bank chief warned that the US is heading for a painful period of slow economic growth as the Fed raises rates to fight inflation.
The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation.
And he said there should be no expectation of rates being cut in the near term, saying the historical record cautions strongly against prematurely loosening policy. Well, reiterating the outlook, Cleveland Fed President Loretta Mester saying, "I think we're going to have to move interest rates up above 4% and probably need to hold them there next year." Following the speech, interest rate futures traders raised their bets that the Fed will raise rates by 75 basis points next month. The US two-year Treasury yield briefly reaching its highest level since October 2007 before stabilising at 3.38%, while the 10-year yield rose above 3%. The US dollar strengthens and the Aussie dollar currently at 69.6 US cents. In US economic data, personal income rose by 0.2% in July, with spending up just 0.1%, which was less than forecast. And the key inflation measure, the core PCE deflator, which is closely watched by the Fed, it's up 0.1% in July to be up 4.6% for the year, slightly below forecasts. So heavy selling is expected locally this morning on our share market in response to the hawkish view by the Fed chair there. ASX futures currently off around 1.5%. Oil prices entered the week higher on signs from Saudi Arabia that OPEC could cut output. Brent crude rising to above $100 a barrel. Base metal prices were mostly higher, while gold futures price fell more than 1% as bond yields and the US dollar rose. And the risk-off sentiment has seen Bitcoin tumble below 20,000 US, taking the rest of the crypto market with it. And today we'll hear earnings results from Fortescue, Mineral Resources and Northern Star, among others. This morning, A2 Milk reported revenue up close to 20%, a share buyback announced there, and its outlook for high single-digit revenue growth. And Aussie Broadband, net profit after tax at 5.3 million, and its FY23 revenue range forecast between $800 and $840 million. That is your day ahead. We'll see you again tomorrow.